What's up everyone, Sean Taggy coming at you with another video. Today it's a question that people quite often are unfamiliar with, and that is, what is a cap rate? So I'm going to have multifamily cap rates explained. Alright, so this is typically in like multifamily, meaning like 5 units or more, like big 100-unit apartment complexes, you know, skyscrapers or retail, shopping centers, or storage units. So in the commercial real estate space, typically, this also can be calculated in the single family space. Our pro formas have that on there, the cap rate. But it's basically like kind of a standardized way to adjust for what a property's worth, what an investor is willing to pay, and what type of return they're willing to get on an investment property, an investment real estate asset. So I'm going to pull up my calculator here because we'll probably be using this quite a bit here. So cap rate stands for capitalization rate, or cap rate, or the cap. You know, people say that a bunch. You know, it's a 5 cap, it's a 6 cap area. So what a cap rate kind of does, it measures like what the risk tolerance, or what type of area that investor is willing to pay. And so I'm going to kind of tune this a little bit towards multifamily, because we buy a lot of 100-unit, 200-unit apartment complexes here in town. So this is kind of what I'm more familiar with. But what a cap rate is pretty awesome. So you, as you know, when you own income producing real estate, a multifamily, you generate income, okay, through several ways. I'm not going to go too much into that, but let's say you buy an asset and you get and this is done per annum. So for the whole year, you make $100,000 in income, right? That's rent, late fees, pet security deposits, taken back, you know, screening fees, laundromat fees, just all these things, right? Then you have expenses on the property, management fees, taxes, insurance, whatever, turnover costs, repairs. Let's just say $50,000. Okay, so then there's something called your net operating income, or NOI. Okay, people say NOI all the time, get familiar with that. It's basically just income minus expenses. Pretty easy equation. You know, these will be just long line items, but just look at the bottom of each of these, the bottom, and look at the NOI. That's pretty much the simple way to go about this. So your NOI on this property is $50,000. Okay, we're going to use this kind of as the example. So your NOI. Okay, now, depending on the cap rate, it kind of helps you evaluate what an investor would pay. So if this was like in an A-class area, you know, it depends on the market you're in and all of that, but typically A-class areas, they're going at like a 4 cap rate right now. That's like meaning like a newer built multifamily asset, 10 years old, 15 years old or less, in kind of a nice neighborhood where rents are typically on the higher end of the average rents for the area. So what you would do in an A-class area at a 4 cap, so 4% cap, is you take the NOI and divide it by the cap rate, and that'll give you kind of like the value of the asset. So 50,000 divided by 0.04, meaning 4%, that would give you 1.25 million value. So that, like if I were a broker, that's typically what they kind of recommend. Hey, I've seen in this area, right, here's your subject property. Can you see over here on the right? Yeah. Here's your subject property. And there's, you know, 5 or 10 other assets, or 2 or 3 that have sold. They've all sold around this for a 4 cap based on the NOI of these sales. So I'm going to put it at a 4 cap for you. So that's what I would suggest selling it at. Now obviously, like, that's just kind of what's been selling nearby, and also they can kind of go by price per unit, how much it's costing per door. But anyways, like, that's what I list for. Now obviously this isn't like what it is worth. I mean, there's obviously people that'll come and offer less. There might be people that are offer more, right? Other investors when you're selling it, but it's kind of just like the going rate in this A-class area. But let's say also, now do another example. Let's say this is in a medium part of town, you know, kind of in the suburbs. Here's the subject over here, but it has the same NOI, right? It might have more doors or something like that, or whatever. And let's say in this Class B area, so this is kind of like, you know, 15 years older to 30 years older or something. It's in decent repair, decent average incomes, and people buying over there. You know, so the broker, you know, or you as the seller would see, oh, well, stuff's kind of selling in a, you know, a 6 cap. So you take your NOI 50,000 divided by your cap rate of 0.06, and that would be kind of like the value on it, evaluating it. So let's do that for fun. So 50,000 divided by 0.06. So this one might sell for 833,333, right? So you see, like, just 2% on the cap rate. Let's do that for fun. Divided by 125 minus 100. So that's, 416,000 less just from 2% or 200 basis points on the cap rate. So obviously, like, cap rate really swings a lot of what your value is, right? Okay. Yet again, let's do another one. Okay, so now this is in, just the rough area of town. There's C class, your working class people as well. There's D class as well. This asset is, the lower end of the income spectrum, not as good of schools, maybe a little bit more crime and all of that, the working people. But an investor's going to get, they're probably going to want like an 8 cap in this area, and these all vary. I mean, these could be scaled down or up and other things. I'm just kind of giving you an example here. And let's make it fun by, let's just kind of make this a 10 cap. So your NOI divided by your 10 cap would be your value on this one. So I'm going to guess it's going to be 500,000. So 500K. Okay, so kind of cool thing with cap rates, if it's a 10 cap, it's a 1-to-10 ratio. If it's a 5 cap, it's a 1-to-20 ratio. Just like for every dollar of NOI, your value's 20 times more. But in a 10 cap, every dollar is that. 7.5 would be, in between those two, a 1-to-15 ratio. Okay, so that's kind of cool to just see kind of what cap rates are. Now here's the cool part. Okay, stick with me here. Here's the really awesome part about these cap rates. Hopefully that makes sense to you. Now let's say your strategy is to increase the value. Let's say, whatever, you have 20 units, they're renting for whatever, and you want to increase the rents $25 per month. And you're gonna spend, 20 grand to just kind of fix some backsplashes on these units or something like that. So you're gonna invest 20 grand, you already own this, but you're gonna increase, and let's say there's, 20 grand, and let's say there's 10 doors here. So you're going to spend 20 grand, so that's 2,000 a door, right? But you're going to that'll help increase the rents by, let's make this fun. That'll increase the rents by $50 per unit. So 50 times 10 units, right? I'm going to increase the rents by $500 a month, but times 12 for the whole year, right? So times 12. So I'm going to increase the NOI. This now becomes 106. So then this becomes 56K on your NOI, right? According to this theoretical thing. So you're like, wait, I'm going to spend 20 grand but only get 6 grand more a year? Like, that doesn't seem great, 6 grand divided by 20 grand. That's a 30%, ROI. You're like, Actually, to be honest, that's actually really great, right? That's pretty awesome. But here's what's awesome. Is your value is greatly increased. Let's say you're at a 5 cap, right? 5% cap. So now let's do, well here, actually I got to do it at a 6 because you'll understand the whole, you'll understand this a little better. $56,000 divided by 0.06, 933,333. Okay, see that? By spending 20 grand, yes, I get 6 grand more a month, right? Or sorry, a year on my NOI, but I can now sell this sucker for 100 grand more. How does that sound to you? Does that sound like a pretty good return on investment there? 20 grand to get 100 grand. What is that? 100,000 return on 20. That sounds like a 500% return on investment. Now obviously, like, this is just a theoretical example. Yeah, this is what we do. This is what we do with multifamily cap rates and the leverage on here and everything like that. Say it was a 10 cap, it'd be half that. Still, you'd get 250% return on that one, right? So, like, obviously, like, there's lots of variables and lots of equations here, but basically showing you this, a lot of numbers on there, a little crazy. Just showing you the power of cap rates, the power of multifamily investing, right? This does kind of work in single family a little bit, you know, because like, you know, a buyer in single family too, but this really works well in multifamily because it's all based off just the cap rate and the numbers. Typically in single family, cap rates aren't really used because it's usually like homeowners will pay more sometimes, you know, like an investor will pay $200K for an asset that rents for $1,500 a month, but maybe a buyer, you know, just a regular homeowner, oh, well, it looks pretty, it has great granite, I'll pay $220,000. So you can't really use cap rates too well in single family. This is just a way to kind of adjust for the market and kind of help you on your analysis of what you can do and how you can add value to your apartment complexes and really start making some great money and great return on investment there. So hopefully that helps you understand what cap rates are and why it is so important to increase that NOI, because it's really a one, depending on your cap rate, you know, a 1 to 15, 1 to 20, 1 to 10 ratio of every dollar you increase on this NOI. So that's why you always are focusing on how to increase your income, how to reduce your expenses, thus your NOI, and thus the value of the property for when you go to sell it or refinance it. So this is what we do. As we buy multifamily properties as well, ourselves personally, me and my partners, and also, of course, sell nice, great turnkey properties to you. It's basically like this kind of same theoretical value here with the single family, just take off a couple zeros. So hopefully you guys understand this. Thank you so much for watching. Have a good one. Subscribe.